Got several loan applications this morning, but 2 are for VA buyers who are PCSing across the country, meaning they have orders to Washington State and they need to buy a house here. I had my team pull certificate of eligibilities, also known as COEs. The COE is going to tell us the entitlement available for the borrower, veteran, active duty, and we're going to take a peek and see if they own any homes. Is any of their entitlement charged currently? Are there any foreclosures? Anything like that will all show up on the COE. It will also show us any disability pay, and that gives us a lot of information. So we've got those in the file. First thing I noticed in this application is that the borrower is married. One thing about Washington State is that we are a community property state, which essentially means what's mine is yours if we are legally married. So anytime we have a married borrower utilizing a government-backed loan, we need to verify their spouse's debts. And so for this file specifically, I'm going to have to go and grab wife's information, pull credit. They don't have to go on the loan, but I do have to count the debts of the spouse against the borrower, which comes into play with debt to income ratio. It doesn't technically have a minimum credit score requirement. However, some companies will have overlays that have higher credit score requirements. We don't. We just go off of the automated underwriting system that tells us yes or no. But this borrower's credit is income. We grab a quick LES. We take the last 2 LESs. It's going to show us a breakdown of base pay, any other special pays, BAH and BAS. And with BAH and BAS, we actually get to gross up those numbers because they are non-taxable. We as a mortgage company, as the mortgage industry, we look at the gross income, so what you make before taxes. So if we're not paying taxes on income we're receiving, a lot of times I get to gross it up, which means I get to give you a little bit more income than actually shows. That can really help with debt to income ratio, especially if we're looking to sneak up to your max purchase price. And all this file looks great. I need to pull the spouse's credit and add her liabilities to the file to verify that we still qualify debt to income ratio wise, but it looks like this borrower is going to be pre-approved. And I know this is what you guys all care about. So estimated monthly payment for a VA loan with no money down at a $400,000 purchase price, we are looking at an estimated payment of principal and interest $2,216, hazard insurance, also known as home insurance, which you get to shop for $100 a month, property taxes about $250 to $275 a month. I like to go worst case scenario. This could be a little bit higher. It's going to be specific to the home, so take that with a grain of salt. Anytime I'm running numbers for a client without a house, I'm using estimates, so all the numbers are subject to change. And then we have no mortgage insurance because VA loans are the absolute best, and estimated payment is approximately $25.70. Let's update this here, but yeah, should be ready to rock and roll. Issue a pre-approval letter. If you know anyone who's looking to PCS to the area, I'm happy to help them come up with a game plan. I love VA loans. I love speaking the language. They're my favorite.